Hello and welcome to the Stats Harvester tutorial where I'll show you how to use Stats Harvester, which is the NinjaTrader add-on that I developed to help traders find high percentage winning trades based on past price action stats. Stats Harvester works on any stocks, Forex, futures, and cryptocurrencies. But before we begin, I'd like to cover a few disclaimers. Futures trading involves substantial risk of loss that is not suitable for all investors. Past results are not necessarily indicative of future results. The high degree of leverage that's often obtainable in futures trading can work against you as well as for you. The use of leverage in futures trading can lead to large losses as well as profits. Futures trading is not suitable for all investors and involves the risk of loss. You must be aware of the risks of futures trading and be willing to accept them. Don't trade with money you cannot afford to lose. The information provided is for informational and educational purposes only. This information is not a solicitation or recommendation to buy or sell any security, futures, or foreign exchange contract. Any information provided in this video that has no source is merely the opinion of the speaker. We also have a hypothetical performance disclaimer here. Go ahead and take a moment to read that. Okay, thank you. Stats Harvester is an easy-to-use NinjaTrader add-on that can scan the entire universe of tradable instruments, whether they are stocks, futures, Forex, or cryptocurrencies, to easily help you find the best times and best days to trade purely based on past statistics or historical data. Moreover, Stats Harvester provides traders with a variety of additional past statistics such as the price ranges, means of those price ranges, standard deviation of those price ranges, and more so that you can have an idea of potential profit targets and stops too. In our view, no day trade should ever be executed without first knowing how that trade historically performed. Commercial traders, such as hedge funds and systematic trading firms, spend tons and tons of money on data scientists, on data analysts, so they can massage the data, meaning the past statistics, to garner a trading advantage or trading edge for themselves. Knowing past stats is fundamental to how they place their trades. In our view, statistics play a foundational role when it comes to trading. We believe trend lines, indicators, whether it's market profile, RSI, stochastics, MACD, etc., play a supporting role, or what we call a framing role when it comes to trading. In essence, indicators are great at establishing support for a trading directional bias whose premise was formed based on past statistical data. Imagine what would happen to the bottom line profits of casinos in Las Vegas if they decided to forego statistics from their gaming tables or their slot machines. Their entire edge is purely based on statistics. Giving up stats would essentially mean giving up their gaming profits. Let me quickly demonstrate how you can use Stats Harvester to set up your actionable trading plan way in advance of your actual trading day. So let's assume today is Wednesday. It may actually be Wednesday when you're watching this, so that's a happy coincidence. Assuming you've already downloaded the Stats Harvester from pinnaclequant.com, you fire up your NinjaTrader, you load Market Analyzer, and being that we're assuming today is Wednesday, we are doing our homework to get ready for tomorrow's trading day, meaning Thursday's trading day. So we load the Thursday templates. Now, the templates I'm about to show you are all included as part of your Stats Harvester purchase. There are over 130 templates here, and in the future, when I add any new templates, those too would be included at no additional charge for all subscribers. So we load the RTH Thursday template in PST, which is Pacific Standard Time. I have, of course, EST and CST versions as well. By the way, RTH stands for regular trading hours. Okay, so from market open to market close, regular trading hours. If, by the way, you're not in one of these time zones, like PST, CST, or EST, in the Stats Harvester tutorial video, which is included in the pinnaclequant.com customer login area, I discuss how you can easily edit these templates and customize it according to your needs. So I have the template loaded. I have added all of the instruments that I'm considering potentially trading. You can add any instrument you like to this list. You can just right-click on Market Analyzer, click Add Instruments, click on, for example, SP 500, and select all 500 instruments if you wanted to do that. But I recommend only loading instruments you are truly interested in trading. Meaning, if you have no intention of trading oil, which is CL, or gold, which is GC, then there is no reason for you to load it on Market Analyzer. However, for the purposes of this demonstration, these instruments you see here are the only instruments I am interested in potentially trading. As you can see, I've applied Stats Harvester to Market Analyzer. It has given me just the up-down statistics of every hour of the regular trading hours, or RTH trading day. Initially, that is the only information I want. Of course, I'm going to filter down this list by quite a bit, and I'm going to show you exactly how I filter this list once I identify the best potential trades I should consider trading, strictly based on the past odds as shown to me in Stats Harvester via Market Analyzer. Now, I only consider potential trades where I have a past statistical edge of 60% or more in my favor. So for the purpose of making it easy for you to quickly identify the times you are interested in potentially trading based on you taking advantage of historical stats, you can actually do that 3 different ways. The old-fashioned way is simply by sorting each column on Market Analyzer and making notes. For example, as I mentioned earlier, if I'm only going to consider potential long trades that were historically up 60% of the time, I can sort this column and I can quickly see between 6:30 and 7:30 a.m. PST, only Google made my criteria for a potential long trade during that time. Then on the potential short side between 6:30 and 7:30 Pacific Standard Time again, I have 3 potential trades, which as you can see, INTC, that's Intel, MNQ, that's the mini NQ, and NQ, those are the futures. I would do this for each column. To make things a bit faster, I personally prefer to use the Google Sheets application, which I'm going to show you next. But you can also write conditions in Market Analyzer so that it only shows you results you're interested in. So let me quickly edit this column so you can see how easy it is to use Market Analyzer. And there you have it. The only instrument that remains highlighted is Google, where it was up over 60% between 6:30 and 7:30. So back to how I personally prefer to do this. I have my spreadsheet in Google Sheets prepared in advance. Here on this tab, you have the raw data, which I simply exported from Market Analyzer by right-clicking Market Analyzer and left-clicking Export. It's that easy. Back on my spreadsheet, on this next tab, which I've called Analyze in Stats Harvester, I have all the potential trades that I am considering, which must first go through 3 further statistical filtrations, and they are a cinch to do with Stats Harvester. I have prepared every template that you're going to need already, and they are all available to every subscriber. And I have saved them in my NinjaTrader workspace too, which you can also do very easily. You load your templates as I have done here. You then click on Workspaces, New, name your workspace, and click OK. So anytime I want to use these templates, which are built using Stats Harvester inputs, I just open the next day's workspace and everything is ready for me. This way, I can get my trading research homework for the next trading day done in less than 30 minutes. In essence, all of the heavy lifting is already done for you via the Stats Harvester indicator. You simply go through each column and pick the instruments you would potentially want to trade the next day. I chose 60%. That's an arbitrary number. You may be more conservative and would only want to choose potential trades where the past odds were in your favor by at least 65% or 70% or higher. It's totally up to you. In my view, 60% past statistics print is a decent edge, particularly because of how I apply the framing portion of my historical statistical trading bias, which I will discuss next. But for now, let me show you my research, which took me about 15 minutes to complete. On this tab of my Google Sheets, I identified well over 30 potential long and short trades I can make the next day, which still have to go through the filtration of past stats that I mentioned earlier. So that number is likely to get filtered down to 5 or 6 trades from the 30 plus potential trades that I found. Now, before I show you what these other tabs of 30, 15, and 5 look-back periods are, let me briefly relay what I'm looking for. If I'm looking for long trades, I want the mean, the sum average, to be positive. If I'm looking for short trades, I want the mean to be negative. You've probably heard of the adage stairs up, elevators down when it comes to trading, meaning price climbs up slowly but crashes hard. So if I'm considering potential long trades, I want up percentages on past trades to be over 60% for the look-back periods, but I also want the mean, the sum average of the total price range during those look-back periods to be positive, meaning the bulls had some edge over the bears, even if that edge is ever so slight. Next, I want the price range itself to be decent, and I want the standard deviation of the price ranges for the various look-back periods to be relatively consistent. So just as an example, if I'm looking for at least 20 tick move in the time period being considered for a potential trade based on past stats and data, I want there to be standard deviation consistency in that price move. As to the tabs you see here, they are various look-back periods that represent a past stat breakdown of the last 10 minutes in RTH for the last 30 Thursdays, the last 15 Thursdays, and the last 5 Thursdays. I'm not going to risk money on a trade where the potential pass range was 2 or 3 ticks. Now, for this purpose, let's just say I narrowed my potential trades for tomorrow, Thursday, because remember, for the purposes of this demonstration, we are assuming we're doing our past odds research on Wednesday for Thursday's trading day to just a single trade. And the time period that I chose was the last 10 minutes of the regular trading hours session. The instrument that I chose is the ES instrument, which is the E-mini S&P 500 futures. Many traders nowadays trade the MES, which is the micro ES. It's worth mentioning, in reality, you are more likely to filter everything down to 5 or 6 trades, but it all depends really on how many instruments with which you started your past stat research. So if you had hypothetically ended up with 5 potential trades, all of which were different hours, then you would simply load the respective templates for those hours and for those days. It's all available on the Market Analyzer. You just right-click anywhere on the Market Analyzer and load the respective templates with which I've provided in your pinnaclequant.com customer login area. Incidentally, some of those potential day trades that you choose for a given trading day, you may actually enter. Some you may not enter as you look at the ultimate setup you are presented with on the chart. But again, for the purposes of this demonstration, I am only picking a single potential trade to make the demonstration as clear as I can. Usually, lots of activity takes place in the last 10 minutes before the regular trading hours of the market closes. So I have included that time frame in all of my templates. Now, the past stats data included in these 3 look-back periods are the 3 levels of filtration I mentioned earlier. And just by quickly glancing at this data, you can clearly see there is consistency in each look-back period. Look at this, 60% for the potential long trade on the 30 look-back period, 60% again on the 15 period look-back, and 60% on the 5-day look-back. Look at the standard deviation of the furthest 2 look-back periods. Here's the 30-day look-back period at 29.82. Here's the 15 look-back period at 22.74. So we have relative consistency in the standard deviation. It's not like the 30 look back period is 29.82 and the 15 is 8. That's relatively consistent. Now, why do we look back 2 periods and not the furthest periods and not the nearest period? Is because we're looking for the price ranges. That's what we're analyzing. The standard deviation is analyzing the price ranges, so we're trying to have a larger data set of the price ranges. At a glance, I have determined that this is a potential trade I may enter depending on how the chart looks as I get close to the pre-planned designated time. And I will discuss the framing portion of my trade entry decision shortly. Incidentally, at the onset of this demonstration, I noted you can use Stats Harvester to potentially pick your price targets and stops. You'll note Stats Harvester breaks down the average price range when price moved up and the average price range when price moved down. It also provides you with the 1 standard deviation move as well as the 2 standard and the 3 standard deviation move. All of these moves, the analysis is of course being done on the price range data sets. As a quick example, you may choose to select a price target that is within the standard deviation for a higher probability of hitting that price target, and you may not want to be outside of 3 standard deviations because based on past stats, it would be highly improbable, but not impossible, to get to that price target. I will discuss price target and stop strategies, including break-even and trailing stops, further in Stats Harvester tutorial located in the pinnaclequant.com customer login area. Next, I'm going to show you a couple of chart setups during the last 10 minutes of RTH, or regular trading hours. Just because we picked a potential trade based on past statistics does not mean we are necessarily going to execute that trade. We still need some sort of support for our direction bias, which is based on past stats. Remember, I am just giving you an example of just one potential trade. I suspect you will find 4 more potential trades depending on the number of instruments you analyze via Stats Harvester each trading day. Now, personally, for additional support, or what I call framing my foundation of past odds, I'm looking at price structure, I'm looking at the short-term trend line, I'm looking at the Fib 50, I'm also looking for consolidation. In essence, I'm looking for any type of support for my trading direction bias whose premise is built on past stats. So let's take a look at these 2 ES charts. Which of these setups do you want to trade knowing what you know about the past stats? So both of these charts are ES charts. They're both on the 1-minute time frame, and they both are going until 12:45 p.m. Pacific Standard Time. That's the last bar that I'm demoing here. So both example 1 and example 2 are 2 different days, and they're headed towards close. Okay, so they're 15 minutes before RTH close. So you'll notice here that price at around 12:39 p.m. Pacific Standard Time was rejected, and it started moving south. That's example 1. Example 2, you'll notice that price was tested and got bought and has now broken out in this short observed time frame here. So you may want to forego example 1 and potentially place your trade for example 2. I'll go over what happened here. So assuming, by the way, you could enter this trade right here. You don't have to wait until 12:50 to enter the trade because you're anticipating an up move based on Stats Harvester, which showed that in the last 30 periods, the last 15 periods, and the last 5 periods, price moved up between 12:50 p.m. Pacific Standard Time and 1 p.m. So now you're 5 minutes ahead, and if you feel good about it over that price breakout, you can go right here. Let's see what happened. I'll go slowly here. That's 12:55. That's 12:59. Rather, that's 12:59, and this is 1 o'clock. So had you entered the price here, it would have gone against you a little bit. That's pretty typical. And then it moved up. That's almost, what is that, a 4-handle move, 3 ticks shy. So if you had, let's say, 5 contracts on that, you would have had a little bit shy of $1,000 on that. On this one, the one example 1 that you may want to forego because price started to move against you, you're anticipating an up move, but 5 minutes into it, you're already seeing a down move. So let's see what happened. Whoa. At 12:57. Bulls fought back a little bit, closed at 1. So had you entered at, let's say you waited for a potential price entry, had you gone there, you went against the grain here, which you may not want to do, it's up to you. I prefer personally to look for a breakout. Look for some sort of a support level. Here you had a breakdown of the price. The price is getting rejected, it's moving against you. So, but if you were to enter, let's say you decided to enter here, you would have closed there, but your price would have been tested all the way down here. So this is the framing portion of what I mentioned earlier. You have your foundational stats, but you want to look for some sort of support. Now, some people will say, Rafi, isn't it true that once you enter the trade, it's 50-50? And the answer to that is yes, technically it is true. You have a future event that has a 0 or a 1, so it's either going to be yes or a no, okay? But here's the truth. Human beings are creatures of habit. The traders, whether they're trading manually or they're trading algorithmically, the developers of those algorithms, like myself, are humans. So we are all creatures of habit. If something is rewarding, we tend to do it over and over and over again. And based on the past stats that a lot of people are monitoring, particularly on the commercial side of trading, they are monitoring those statistics. They're seeing that price moved up at that time frame. So they have a tendency to do that again, especially if they're the ones who are trading. They saw themselves get rewarded, they're going to want to do that again. Now just look at yourself. Let's say we all have morning routines. Let's assume you run every morning. You go for a jog right before work, right? If we've studied you and we've determined that in the past 30 mornings, you went for a jog 22 out of those 30 mornings, we can feel relatively confident that you're going to go for a jog again the next morning. You may not, but we're feeling based on the past odds that you're going to go for a jog. Now, we are going to frame our foundational statistical bias around something else, an indicator. Let's say you live in a house. Let's say you have a garage and then you have a front door. If we see your garage door open first, we're going to assume that you're going straight to work and you did not go for a jog. But if we see your front door open, we don't even have to look at your running shoes. If you see the front door of your house open, then guess what? We can assume that you're going to go for a jog again, just like you had done 22 of the last 30 mornings. Now, when it comes to stats, every trading day matters. Every trading day matters. All of the activity that transpired on that trading day has been recorded and it is being poured over. Those statistics are being poured over by many, many commercial traders all over the world. So when those stats change, you have to change accordingly. Just because when you ran the stats today, you saw a 60% up move, checking today on the last 30 periods, the last 15 periods, the last 5 periods, doesn't mean that if you were to check it 4 weeks from today, you're going to see the same stats. Those stats may have improved, giving you further confidence that that's a good bet to make, or they might have gone the other way. So instead of a 60% up move, maybe now they're showing a 40% up move. So you constantly have to check it every single day to see if there's any fluctuation in those numbers, whether it's in your favor or against your favor. And again, when I say against your favor, you may not go long on a particular position. You may go short on a particular position. It all depends on what the stats show. That's your foundation. Next, it depends on how the framing of that foundation works based on the chart. You'll notice on the chart, I have no indicators. I can easily eyeball it. You can add your indicators. You can add a Fib 50, for example. And speaking of a Fib 50, there is no 50 as a Fibonacci number, but it is a halfway point of a retracement of a price move, and it's pretty much observed a lot in the market. So a lot of people use the Fib 50, and the Fib 50 is really included in every Fibonacci indicator that's out there. That's a retracement Fibonacci. And again, it's not a Fibonacci number of 50, but it is observed so much they include it. So without even checking any of those indicators, you can just eyeball the price structure and see if price is moving in the direction you anticipate the price to move based on the statistics you observed in Stats Harvester, or if it's going against the grain, then you can potentially forego it. So in our example 1 in the red here, we passed on the trade. However, on the chart on the right and the example 2 on the black, we decided to take that trade. Remember, using Stats Harvester, depending on the number of instruments you initially analyze, you may end up with 5, 6, 7, 10 different trades you can make in a single day, potential trades you can make in a single day. You don't have to take all of those potential trades when the moment arrives. You can take, even if you take half of them, that's plenty of trades that you would be making in a given day. Now, going back to the jogging example that I gave earlier, every morning you wake up, there is a 50% chance that you're going to go for a jog, and there's a 50% chance that you are not going to go for a jog. Every future event that has a yes or no, that has a 1 or a 0, is 50-50. But the truth of the matter is, past statistics, past facts that happened tend to play out in the future. It's the same reason why if you try to apply for a loan, a home loan, no matter how much money you're making in a year, they want to know your credit score. They run your credit. They're trying to determine if in the past you have paid back your loans, because they feel that the past is a pretty decent indicator of how you will act in the future. It's not necessarily so. What happens in the past doesn't necessarily happen in the future, but it is a pretty good indicator. And that is why you try to hedge that even further by saying, I'm not just going to look at the foundational stats. I'm not just going to look at the foundational stats. I'm surely going to give them a lot of relevance, but on top of that, I'm going to frame the foundational stats, meaning I'm going to look at the chart and see if price movement was going in my favor a few minutes before I entered that trade, or if it was going against the position that I thought it was going to go into. So based on that, you can make your final determination if you're going to enter that trade or if you're not going to enter that trade. I hope you enjoyed this demonstration. I hope that you use Stats Harvester for many, many, many years to come in all of your trades. I wish you happy trading, and thank you so much for your time. God bless.